Okay, hi there, guys. Just let me know if you can hear me loud and clear, and we'll get this ball rolling. We'll get the party started. Okie dokie. How are we going there, Paul? How are you, Gino? Hope we're doing well. Nice little trade, Paul, by the way. It was the Bank of Queensland, wasn't it? It's going nicely. All right. All good. Fantastic. All right. Let's get up and running. Um, oh, good, good. Good God. It's a bit like the way the markets are at the moment. All right, so welcome to Trade Setup and the live stream. It's the 5th of July, so we're kicking along nicely the new financial year as tax time is coming. So everyone's favourite time of the year, I'm assuming. If you're anything like me, you just try to put it off, but you can't, unfortunately. Welcome to anyone that's new. Just remember you can see us on Twitter. If you log into us on Twitter at the top left-hand corner, trade_setup. We put bits and pieces up there. Trying to get a bit more active up there. Top right hand corner is Facebook. I mean, we don't do a hell of a lot in Facebook. It's not that important. Probably have to change this screen snapshot actually. But the most important, join us on or subscribe to us on YouTube, the bottom right corner, on the, what do you call it, the handle there. I think is the technical term. And our general advice one, if you haven't read that, give that a bit of a read. All right. Hope we're all doing well. I'll get rid of this. Might as well just get rid of it and get straight into it. All right, change the screen over. So yeah, the US was obviously closed last night. We'll have a bit of a rundown. So, oh, actually, just to get started, we'll have a rundown of the markets, see where we're at. I think it's interesting having a bit of a squiz at the banks too, to see what the XJO is doing. But obviously, the important thing I think is coming up on the, what is it, the 6th, so it's tomorrow. Uh, okay, Mel, is it the actual stream that's just kicking out? Just let me know. Just keep an eye on it, you guys. Let me just quality. I'm hoping it's not the stream. It seems to be coming through okay, but just let me know if it is, if it keeps buffering. Um, yeah, look, we'll see. All right, so we'll have a look at the what's happening over the US. Obviously closed last night, and see what's happening with, was it China and the US, the trade tariffs. So that's meant to be implemented. The tariffs meant to be implemented. Well, it's on the 6th. I don't know if that's the 6th US time or tomorrow for us. So it could be tomorrow night. Well, we won't get. We'll see how the US goes. We'll probably cop it on Monday if that's the case. If it's something kicks off. Oh, okay, that's all right. I know, Mel, with me, it's Optus. I've got Optus, and it seems to be uploading is just frustratingly slow from where I used to be. Still waiting for that old NBN, but that was meant to be coming the start of the year, apparently. As old, any good Optus customer service will lie to you, saying it's on its way, but you just don't know. We're the only one around our neighbourhood, our street doesn't have it yet. Either side, parallel to us, does have it, so it's a bit frustrating. Um, all right, let's take a look at. We'll take a look at the markets. Get straight into it. Now the US obviously closes. Not much. Probably they haven't moved that much. So when do we speak last? Oh, it was Monday, wasn't it? Let me make that bigger. Second. Yep. All right. So that was a Monday. The Tuesday night. Wednesday night was obviously closed. So not much change since Monday, since we last spoke. We're really just waiting to see how it all goes with the tariffs. Now, I think there's still that sort of, I mean, it's coming to the deadline now where the US said they were going to impose, was it 35 billion of tariffs on China? And of course, China have been spruiking that they're definitely going to retaliate. But they were saying that they're going to let the US make the first move. I think I mentioned that last night. So it comes down to that. The markets have been very choppy of late. As the market, you've got on one token, you've got this, which could throw a spanner into the works. And I think you're already seeing a few figures starting to ease back because um, I think it was at the World Trade Organization last night, or WTO was saying last night that their forward-looking figures for growth, or the forward-looking growth figures, are starting to back off a bit. So they're expecting growth of 4.5%, say, and instead they got 4%. So it could be just everyone's sort of easing back a bit, taking the foot off the accelerator a tad, just waiting to see what's happening with these tariffs, whether that's going to cause some problems, um, or whether the other side of the coin is that it's what do you call it, a negotiating tactic from tariffs, Trump. And he's pretty good at that sort of stuff. I guess he's built his business. He's not a billionaire for nothing. Whether he's too aggressive or he does some stupid things, but he seems to be knowing what he's doing, I guess, with negotiations, and whether that's just a tactic. Um, and he's going to come out, say, tomorrow night at the dying minutes and say, I'll give you an ultimatum. If you do this, we'll do that. And then it's all sorted. I think it's going to hurt China, obviously, and they're trying to drum up support with the EU also against the US and their tactics. So obviously they're going to feel the pinch, they're going to feel the squeeze, and this could not be. It's not going to be so good for the yuan? And they said they were going to let it float, as in free, rather than try to support it. But I'm assuming if it starts getting out of hand and getting slammed, then they're going to support that one. So it all comes down to, I guess, whether or not the US start imposing tariffs and kick it all off. And that's going to be interesting to see how the markets react, because they have been up and down like a yo-yo. You've got still global growth is good, it's quite strong, but there is that, not cracks, I'd say, slow cracks appearing. I think it's just everyone sort of backing off just to wait and see to what's happening. No one wants to go and buy a whole lot of stuff or start putting in orders, and all of a sudden the prices have jumped because of tariffs, and um, they've ordered too much. All these sorts of things. I don't know how it all works, but I think there's a lot of companies that are just tightening the belts a bit because they don't know what's going to happen. So it comes down to, was it the 6th, which could be, like I said, it could be Friday night our time, so we're going to miss the bulk of it. And I think we have been choppy the last few days because of it. But also the XJO doesn't look too bad. So if we go, that's the Dow. If we go click over the XJO, that, as we're seeing now, you can see the stochastics, the selling pressure's coming in, but it's actually holding up here. Not too bad. I wouldn't say it's too bad at all. It could be like we get a bit of a pop up and then a push down, but you can see every time it sort of pops down to 61.75, it's bought up. Then we get a down day yesterday, an up day. Whether it holds the highs today, holds highs into the close, running up 29 at the moment. It'll probably back off. I wouldn't be surprised. But then we get one of these days, it followed maybe tomorrow or the next day. I'd assume that not much is going to happen. We'll probably chop around that 62 mark up until we got more, I guess, more news out on the tariffs and what's happening there. Whether it's going to cause problems. Anyone's been watching copper. Copper's been copping a bit of a pounding probably the last few weeks. It hasn't been doing well at all, and that's because obviously China being the biggest importer. What's going to happen there? So no one's willing to put the risk on the table when they don't know what's going to happen, and which is only prudent. So our market, like I said, it doesn't look too bad up here, but we could be, if they do start imposing tariff and that kicks off a bit of a trade war, rather than just the talk of it, but it actually kicks it off, then I think the market's going to be adjusting a bit. US might back off a bit. I mean, who knows? But it's more of a wait and see game. We've got a couple of days to wait. We'll see how the US goes tonight, what they do, to what we do tomorrow. And I wouldn't expect us to be getting out of hand tomorrow and kicking off like with another strong day tomorrow. We close up at around where we are at the moment, 6,200 above there. And then we kick off a strong day tomorrow. Then tariffs are implemented, and then the trade war kicks off, and then boom, we get poleaxed over the next couple of days. This daily trend is definitely up. It looks like it's a nice little zone for buyers to keep stepping in and supporting prices. See if we can kick up through that 62.50. It all looks set to do that. We may need a bit of price action still. It might be a couple of days until we sort of start building, and it might be something like this. It kicks up, has a minor pullback, builds a minor higher low, and then get that press up through 62.50. We'll see the weekly. It is overstretched up here, so the weekly looks like it's due for a minor correction. We should be on the daily a bit of a deeper correction on the daily. But yeah, that weekly trend is definitely still up. It's probably getting, like we said, getting a bit of ahead of itself. It's actually, if you can draw a channel up there, it's probably getting to the top end of the channel. May have still a bit more to go, but we'll just see. What do we got? The FTSE. We'll get back onto the daily. That FTSE is still sort of in that grinding motion lower. See if it can hold up above 7,500. What have we got? The DAX. Yeah, the DAX has had a bit of a deeper sell-off, like we said. We've had that push up, pull back. If it was strong, it could have gone. Instead, we've got a double top. Double top's generally going to lead to a deeper pullback. Even if the market's got to reset itself, it's trying to reset itself here and then push up through the highs. Can't do that. It has to have a deeper correction to wash out some of these late buys and start to reset itself at a deeper level, which is around that 12,250, and see if they can get that push back up through 13,250, potentially into new highs. But I think that's over the longer term anyway. What have we got? The Nikkei. Nikkei, that weekly looks pretty weak at the moment. That looks like it's potentially. There's one thing to look at this actually, now that I'm talking about it. On the weekly, it's only minor details, but it's something just to take notice of. What you can see is the market's been pushing up. We had that pullback at the start of the year, big capitulation quite fast. I managed to spit that word out, capitulation. That big sell down in January, February, and then that sort of bounce. We've got the lows. What was that back in about March? Back in March, it started to grind its way back up, and it took out the previous lower highs, which were just in here. What's that? 22.5, say 22.500. Took out that with that grind lower. We had a bit of a pullback. Again, that was what we said before. So just what we were talking about on the DAX. That's that secondary move up. It's trying to go. What it really was is just retesting the highs. The market can't go. It's not strong enough yet. I don't think there's enough enthusiasm about the market. So what you do is get that deeper correction. So even though this looks like it could potentially, you've got a double top up there. It could just be pulling back to get that steam to bounce again and build a major high low somewhere around, say, 21,500, just say, if that is going to be the lows. And it all seems to be matching up with the 6th of July, the tariffs and what's going to happen there. Because that's obviously the biggest global issue at the moment. What's going to happen there is going to be argy-bargy, a trade war kickoff. Once a trade war kicks off, how far is it going to go before a bit of common sense or something kicks in? Because there's really no winners in a trade war. Well, so I've read anyway. Never lived through one, I don't think. So yeah, so the way we can analyze this, on the weekly, doesn't look too good, but you can see these MAs are still up. It's getting a bit of choppy price action since the start of the year. We've got that big sell-off, potential lower high. Now, if this is a lower high in the weekly, that would lead us to believe it's going to break through that 2,500, and potentially it would probably match off with a retest right down to sort of that 19.5 zone, this latest high low. If that, you take the first from top to bottom, somewhere around 19 to 19.5, if that's the case. So could have a long way to go on the weekly. But just flicking back to the daily to see the price action on the daily, that's your initial sell-off. That's that grind higher. That's your pullback. But you've got to analyze this last. If this was a weekly sell-off and it was a major double top, a major lower high, and we're going to get that push down to that 19 zone, you wouldn't necessarily get this price action. It'll be sort of more consistently grinding lower, something maybe like this, or maybe, a lot more of a grind than just a push lower, pop up, push lower, pop up. You get these days, it's kind of bouncing back again. It bounces back quite good for a couple of days, which we might be seeing the next couple of days, bounces back to 22, who knows. But this price action is not conducive for me of a major sell-off to take out these lows at 25. We may, going back to the weekly, we may just have a press down, build a lower high off here, and then that ends up with a decent sell-off where you get a good couple of weeks, strong weeks down. Something like this, you can see this lower high. This price action's had a big pullback. It pushed straight back up to, say, 20,000. That was way back into 2015. And then you got a couple of strong weeks down. That's a bit different to what we've seen. This could be the start of it here, but if you're breaking it down to the daily, that, similar to what we just looked at in the weekly, I don't think this is conducive to a big sell-off that's going to take us down through those lows of 25 to potentially that 19,000 zone. And it's getting to that oversold territory where sellers are given a good rush, and they're potentially, maybe there's a lot of people thinking it's getting down here, but at the same token, the buyers are soaking up that selling pressure. And to me, it's that double top. We're going to pull back, reset ourselves at a major, on a weekly higher level, higher high in the weekly. This move is really just conducive of cleaning out that low, cleaning out the buyers that bought it here, potentially cleaning out the buyers that bought it in here that expect it to push on. They've got cleaned out. So if they're not out, they're under the water at the moment. You got your head underwater. They're behind the 8 ball. I can't think of anything more things to say. But I hope that's making sense what I'm saying. It's just got to clean out a few of these buys, of that grind higher. Because when the market's grinding high there, it's not a full positive market. We still got in the back of your mind, you've got this type of price action. What's going to happen? There's that bargain hunting, that sort of grind high, that FOMO, that fear of missing out type of trading that's pushed it up here. And you're going to sort of board it on that basis. You got to push it. Maybe they got stopped out here, or they got cleaned up, or they got out here, maybe chased it back up, or maybe they didn't get out. They sat through this heat. When it popped back up, you got a double top. As a technical trading pattern, double top is not a bullish pattern. So that's where you start to get this pullback, and they're taking out of the lows. But it's really just going to clean out maybe these late traders and this trend up above 20,000. So anyone that's bought a board above 20,000 is going to feel the heat and either close it out or just going to have to wear it. Potentially, we're going to, with the thought that they're going to have a stop way down at say 20,000, even just below this low here. Was it 20,350? So just below there. So yeah, we'll have to see how this goes. It's, for me, the weekly chart, it's looking weak, but the daily chart is, we just, this move here is just engineering a bit of a clean out, these late buys. So unless we get a couple of days which starts popping up, it could just continue on. If we get a couple of days starting to pop up and build, and you might want to see it pop up, pull back, build a higher low, and then go. It's going to take a few days, obviously. Then I'd be biased to think that weekly was just more of a clean out, and we're going to start seeing a push up through 23,000 and beyond, potentially to those highs at 24. So a bit of a chat about that. Hang Seng, there's nothing much to say about it on the daily. It's just been belted down here. So it's one move down, consolidation sideways, your secondary move down, really clean out all these buys that bought it through here, thinking, those bullish buys, the bears took control, smashed it down. On the weekly, you can see it's quite clear. One move, tried to go. You can see there's some minor higher lows working, but nothing really too strong. These highs were met with lower highs in here, and then the bears took over. You've got that secondary move down, so that's cleaned out a lot of these late buys towards the end of this major trend up. Now, all we have to do is sit back and see if that can start to hold some levels. That trend is still up on the weekly. We've got a major clean out, or whether we get this type of thing, a deep correction. That's the Hang Seng anyway. So, like I said, we've gone through the XJO. Just have to wait and see. Again, just waiting to see what happens. I don't think much more is going to happen today. We'll probably be interested to see if we can hang around with gains of around 20 to 30 points today. Finish up with in the green, and whether or not we just see what the US does tonight. If they back off, we might back off obviously tomorrow, and then just see what happens with these tariffs. If anyone's got Trump's Twitter account, just post in our forum just to see what's going on. If we get anything that pops up, we'll post it as well. He's on that like a rampant bull. He's having a big crack at OPEC, by the way. Yeah, sorry, Ellie, if the screen's blurry, go to the bottom right-hand corner and you'll see a little spinning wheel. Click on that and go to quality and the 720p. And that should clear up the actual screen itself. All right. Now, what I thought I'd just chat about today, I just want to go through the market. Like we said, it's probably been the last few days, it's been a bit choppy, and we have got stopped out of a couple, which is fair. You're going to get stopped out of some here and there. And but they're also the ones that have run quite well. They're sort of stagnant at the moment, whereas the market's trying to decide what it's doing, what the US is doing, what's happening on tariffs. So we haven't had too many big runs. We've got, anytime we've had something that's kicked off, one of our alerts kicked off all right. It's backed off the next few days, so it's really struggling to put on those gains and hold on to those gains, which is probably fair in this type of market. No one's really willing to hold on to too much risk. I mean, you don't want to load up and then find out there's a sorry, Gino. If you go to the bottom right, you'll get a spinning wheel. Click on that. Click on, I think it's quality. I'll show you here. Click on that there. Click on the quality, 720p, and away we go. And that should clear up the sky. It's just a YouTube setting. What we're saying there. So with risk, no one's willing to load up the boat at the moment. So one, you've got the in the ASX where it is. Yeah, for me on the daily, is not looking too bad at all. It's looking like it could have another pop. But if you're going from the weekly, that weekly potentially is could roll over. So it's not an each way bet, but you've got to be careful with the risk, and considering it's had a good little run, this run up, pullback, you've had a secondary run up, so maybe this is just going to extend it up to 63, and then we have a more of a major correction. Maybe something like this, or just something's going to take a bit of heat out of the market. So you've got that in the back of your mind if you're looking to buy, or if you're willing to put on some risk. Um, and I think too, people, if they get up on trades, they're looking to book gains quickly. They're not willing to hold on risk because, one, you've got the obviously ASX where it is, maybe a bit of downward pressure. You've got the banks, potentially a bit of a concern. But also the global picture is not looking too flash, and we don't know what's going to happen. Obviously, nothing has quite happened. It's just all been argy-bargy and talk. But now we come into the crunch where the US saying they're going to put on tariffs on the 6th. We have to sit there and think, why would you want to hold risk? And I think that's what's happening. You're getting this choppy price action that's popping up. People are booking gains. It's pulling back, maybe getting into some other good trades. It pops up, they're booking gains. They're not going to hold it for the longer term, which is all fair enough. Or just easing out of some, partial exit where you wouldn't normally ease out of a partial exit. I mean, even we've got Whitehaven, which I'll get it on the bigger chart. Whitehaven, where it's going quite nicely. Is it the weekly? It's the daily. I'm looking to close it out around that 6 mark just because it's gone so well. I mean, I wouldn't normally do that. And you can see this is a monthly chart. It's not, it's a very long term, but it's coming up into a zone where it's been up here once before, up towards that 6. Maybe you can see it's quite clear. It's stretched up here, bit of a sideways price action correction over good period of a year, and then we've just been going up quite solidly since. I think that was about here. So the start of 2016. You're dropping down timeframes. On each time frame, it's looking quite stretched. So that's why I'm inclined to just look. Maybe I'm happy to close it out if it pops up, and I've got quite tight risk on it. So either way, we get it on pops up through 6. Okay, we're out. Book it. Wait and see what happens, and I'll probably find that it'll do it on the Monday. So look, we'll see how that goes. But I think that's just the case in point with regards to risk. What else were thoughts on the US dollar? Yeah, actually, let me just get up the US. I've been looking at the US yen, thinking it would potentially roll over, but let me just get that up. Where is it? Where is it? I'll get my trading view. I'll get these charts up. Just have a look at the US dollar. We'll look at the yen anyway. Alrighty. So I'll just be a tick there. Gold. Now, who was asking about gold recently on the forum? We said we'd talk about it, but I sent out an alert. It has bounced like we expected. It's quite clear it's bounced off this low, but that sort of matches up quite nicely with this rising support zone at around, well, wherever it was, 1240. It's bounced up there, so it'll be interesting to see now your anchor, anyone that's trading gold. Sorry to get sidetracked. Your anchor's way up here. We're on the daily chart, so you've had this press down from the highs. You can see it chopping around here. We've got a fairly clear resistance zone up here. Market's pressed down. We popped up, built a lower high. The market's pretty much just pressed straight down to that support zone, and we've pulled up right at that zone here around that support around that 1240. So it'd be interesting to see where we just chop up. We build a major lower high again below the anchor of at 1308, to say 13 even, and we roll over and just break straight through that zone. So be interesting to see, or whether we have. I think it's all got to do with this move up here. If we stall about here and we start doing that price action, let me draw it. I want to get my drawing tool. I just want to draw two different sets of price action that to be aware of, especially if you're trading gold. Anyway, before we have a look at now, price action for me, if it does this type of thing and starts doing this, that for me is more conducive to we're going to roll over and go boom, because that's not very strong price action. But if you get a nice, instead, if we get I'll just delete all that. If we get a nice reaction, so this reaction continues, boom, up like that, that for me, that's a big reaction. So that's quite buying strength. There's a lot of buyers really waiting to jump into gold, and maybe they see that as a prime zone. It's continuing that major uptrend, and then we get this type of price action back on the way down. That to me would be more conducive of a good, good strong rally. We're going to build the major higher low here. So there's two different style of price actions. You can see it, and it's sort of all dependent on what happens maybe in the next couple of days. But we'll see. I mean, it could easily just from here just roll over and head straight down, straight take out that, clean everyone out. Anyone that's sort of bought it off that support, not give them a chance to book any profits, turn straight around, boom, straight back. Because you know if you bought it up here, you're probably going to have your prime level is to have some stops just below there. But we'll see. So that's just gold anyway. I know there's someone was talking about it. US yen. I've been watching this, and I was expecting it, to be honest. I thought it might have rolled over from up here, and it was looking weak on the, especially on the lower time frames. We had a sell in here, and it didn't trigger. Instead, it went up the other way. So basically, anyone that doesn't know, when we do our trade alerts, we'll have two zones. Either if it's a buy zone, and we'll have a sell on stop zone. So if you do get triggered into the trade, then you know where your stop is. But if it before it triggers into the trade and it turns around and hits the stop level, we just cancel the alert altogether. So this one here, we had a sell on stop, a sell. I don't exactly remember. I think it's below this low on the 4-hourly chart. No, it couldn't have been, could it? It might have been just below here. So expecting to get in, instead we got it popped up, it cleaned us out of this where the stop would be, took us out of the actual alert, and then it's good because it's actually been grinding higher since. So you'd hate to have been stopped into that and then turn around and whip straight back out. The premise is still there for some weakness, and that's probably currencies can trade a little bit differently. And if you look at this price action that's building here on the daily and compare that to what we're seeing just in here, if I can draw that up, what you can see is that anchor was broken. We've got that there. Just draw that. I know I look at things kind of differently. Not kind of differently, but I'm sure there's a lot of people look at it the same. With regards to tails, technical traders go, well, look, it didn't close below that level. But for me, that's kind of irrelevant because if you got stops under there, whether it closes there or doesn't, it still triggered those stops. It's still triggered some stops below that level, even though you can see that close has been above. It's pushed down, whipped it out, and come back and closed above. Same day, you had another go at it. The next day, it was a negative day, all below this level, didn't close below there, and then started ticking up. That's all great, but whoever was buying it, I mean, if you ask them, they're still going to be a bit, for lack of a better word, pissed off that they got stopped out. If they bought it here, they saw it pop up, took the pressure all the way down there, got cleaned up, saw it whip back up again. Either way, that's cleaned out that anchor level, and that's what we're talking about. We're seeing that swing level cleaned out. It's broken. So anyone that's new into a trade, potentially they're looking to buy, is going to have to look at that and go, that anchor's broken, so that uptrend's broken. Are we going to consolidate sideways? Are we going to keep going up? I wanted to see, if I'm going to be buying this, I'm not going to be buying it on a break up here because I think we're going to wash out and it's going to turn around and roll over. So what it did in the past here was exactly the same thing. It's broken the anchor, popped up, chopped around. We're doing that choppy price action. Whether or not we take out these, like just this, it's only a minor level, but we just recently whipped out that high. Whether we chop, because the key high is right up at 111.38, and whether we roll over from here, yet to be seen just yet, but you can see it's very similar to what we're seeing. These MAs may be contracting, but I think if for weakness in the US, it's got to start having a bit of a push down and then pop up and find some lower highs starting to build like this kind of price action, what we saw previously way back in start of 2018. And that led to a good little sell-off. So for US dollar weakness, that's what I'm looking for. I'm looking for this to roll over, and then this would be a major lower high as compared to way back at the start of 2018. And then from there, it's really just managing your trade. If you're going to be short the US or the US dollar, managing it and seeing where it could just be longer term. It's going to be auto longer term contraction. You can see we've got raising higher lows, lower highs, major contraction. Still, even if it gets down to 107, for instance, and you enter somewhere around 109, with risk of 50 pips, you're still a couple hundred pips there. But fundamentally on the US dollar, again, it all comes down to what's going to happen. I think there, if anyone that follows I think the end of the week on Reuters, you'll get, or maybe on Monday, or they let out something once a week on the weekly positions of the US dollar, and they take into account all the other crosses, and you can see whether the number of longs as opposed to number of shorts has been changing. I think it's starting to swing from shorts outweighing longs to swinging the other way. So it looks like there's been some profit taken on the US dollar across the board, across the other currencies, and it's sort of swinging to being more weighted to the long side. So in saying that, that marries up well over a longer, having a longer outlook on the US dollar, because the outlook is they're raising rates. You don't raise rates, you get a stronger economy, and that's bullish for the US dollar. But on the flip side of that, um, we're sort of all factoring in those stronger rates. On the flip side, if we do have a bit of a trade war, there's going to be flow-on effects, obviously, with companies, and potentially some of those rate rises we're looking at playing out are going to get taken off the table if you start get corporations to start backing off from, I don't know, however it works, backing off from orders. There's tariffs on countries, there's less product going out there, all these sorts of things. They're gonna weigh on companies anyway. So that again could weigh on growth, then that again could weigh on lacking of interest rate rises. They might have to miss one. They might say, oh, look, it's all going all right, but we're not planning on raising it 2 more times this year. We might only raise it 1. You don't know what's going to happen, but it's, again, I just think it's dependent on what's going to happen with tariffs and whether that kicks off. Now, if it doesn't, then yeah, everything plays in. I'll be more bullish on the US dollar towards coming into the end of the year, and start to look for longs on the US dollar, whether it be short on the euro, maybe short on the pound, some of the other crosses on the Aussie. So yeah, that's what I'm looking at on the US dollar there, Chris. Hope that makes sense anyway. If you notice the way I talk, I cover both sides of the market, long and short, because in my head, until I see it play out, and if everything matches up, then I'll sell it. But if it doesn't, I won't sell it. It's pretty simple. You've got to assess both sides to see what seems to be matching up with the price action. All right. Now, John, we've got MPL and Coke. What I might quickly do, I just want to touch on maybe just a couple of setups, just to show you. I've seen a couple, and I think it's been sort of a bit of a recurring theme. There's some that look like they're setting up, but I personally, I struggle to take them, because I don't like to see things overextended on the stochastic. So the bulls are really giving a good kick, but then you get up to that overextended level, and the way I interpret stochastics is not that it's overbought, sell, and it's over. I just look at it for strength, and the strength of the move, and what's happening in comparison to the price action, to see whether it's worth the risk, or it's got a high probability trade or a low probability trade, whether it's worth putting your money at risk in the market. So I thought some of these setups, I was looking at this one here. Was it Sino Gas, SEH? I only popped up this today. It actually doesn't look too bad. I know it's gapped up here, but this kind of price is, for me, it's signaling a bit of a bullish market on the daily charts. Anyway, it's looking quite bullish. You got this big run up, you got this consolidation. It's even cleaned out with this move down, that spike down. That's quite negative, but hey, it's just cleaned out the previous low, and then it started to build again with some higher lows and started to go on. And then you got this little run up, this sort of parabolic run up, popped up, eased out. Some good news obviously coming out. It's gapped up, and it's just been easing back from that gap up. But the way it's gapped up, that gradient on the pullback is quite nice. So instead of the market coming back to the MAs, it's letting the MAs catch up to the market, and it's sort of holding on to those lows. So that kind of price action is saying sellers are still happy to hold on to those. Sorry, buyers are happy to hold on the positions, not willing to get out yet. Whether you're fundamentalist or technical, wherever you have your stops, if you're technical, or the reason why you're buying it, you may still think it's undervalued. They're not willing to get out of the market just yet. There hasn't been any serious kind of selling, capitulation, where the market's rolling over. And then you look at that and go, well, I'd rather be out. This is more conducive to it pretty much starting to look like it wants to build a higher low and go again. So that's off that daily chart. Now, clicking over to a weekly, the weekly, you sort of look at that, and you've come up to that 26 zone, and you can see let's draw it up here. We're starting to get up to some resistance. If we just draw that up there, got that. You can see that sort of zone through here. It's popping up the resistance. We've had that one leg up, the secondary, and we had that secondary leg up right up to resistance. We're backing off that resistance there. For me, that puts the daily now, like we're just looking at that daily chart, that's looking good. Now that puts that daily chart in different context, because obviously you can only see what you can see. You can only see from the left-hand side of the chart. You're not seeing the other price action from way back when was it? Way back over here when the markets head south and we started to lift up. That's all good. You can see that that's just retested on the lows, and then we started to get a push up. And then from this major higher low, well, just want to get rid of all that rubbish. From that major higher low, essentially here, we've had pretty good sort of move, and we've got this leg up here. So it's been, for me, that's more of a macro correction here. This really, you could probably argue it's not really a macro correction. It's more just, we've got ahead of ourselves here, a bit of heat coming out of the market. We've gone again. So for me, that what we're seeing on that weekly chart is probably, now I originally looked at that daily going, oh, it looks great. It looks pretty nice. I just look for a higher low. Then okay, like I always do, flick back to the weekly to see what's going on and put it in the context. Now, the context is we've had a bloody strong run up over the period of nearly a year, smack straight into that 26 zone. We're having a reaction off that 26. So I would rather see a bit more heat coming out of that market on that weekly, or at least this type of price action play out, which might mean a pop up and then a deeper pullback, take a bit of heat out of the market. Maybe we come back to, I don't know, but you can see what I'm trying to get at. We had that press up. We've just pulled back at the moment. So I find it difficult to believe we're just going to pop up straight up and we're going to do this type of thing from here straight up through 26. I'd be more inclined to believe we're going to be doing something less, that secondary move down, and then build a nice little base. And building that or resetting itself at lower levels, what that's doing is clean out a few of these late buyers, resetting itself. It's giving anyone who potentially got cleaned out or missed the boat the first run up, giving them something to manage their risk off. And then potentially this leading to that push up through 25. But I think this is going to take a bit more time to play out. You can see this took, if we get back to here, back to the weekly, good part of, so that was at the start of the year up until, so we're picking about here, April. So 3.5 months, say. We've only really got through the first maybe month or so. 28th of May, June, yeah. So we've only really got through a month of price action. So maybe there's another couple of months left of just sort of contracting before we start to build. And of course, obviously, we're not going to know exactly what's going on with tariffs there. But I think it's just a good little example of why some of the setups at the moment, you can look at the daily and go, oh, they look great. It's worth a setup. It's worth risk. But then when you go back and take a step back onto the weekly and just trying to analyze what's the probability of this thing continuing, I sort of add to this chart alone, looking at the weekly, I would sort of assign a lower probability setup for this. Even though the trend is up, that's looking good. It is getting ahead of the MAs on the weekly. So that's why I'm sort of led to believe we're going to get this type of price action. One, lower high, deeper correction. That's two moves down, back to the MAs, and then start to build. And then maybe that daily is not going to look, it's going to close this gap. We have a deeper pullback and just see if this, is that the level? So that's the high. Is that what I'm looking at there? Oh, that's way back here, isn't it? 13. Yep, so around here. So maybe just pop it up to 24 to 25, having a deeper correction, maybe down to 19, 18, and then resetting itself from there. But we'll see. But I've seen this kind of thing happening quite a bit. You look at the daily and you go, okay, it's looking to set up on the daily, and then you can flick back to the weekly and go, shit, it's gone quite strong. So is it worth putting the risk in the market, considering the environment, considering the global outlook, considering tariffs, all these sorts of things? I think have just got to, and they're probably going to play out very soon in the next couple of days, maybe, unless they put it off and the US come out and say something, and then I think most of the market, if nothing happens and Trump doesn't impose the tariffs and he starts talking it up again, I think it's more fluff than anything else. The market might look at it as fluff and look at it as a negotiating tactic, and he's just playing around trying to get concessions from China, concessions from the EU, and then you probably get a few more bulls might start to step into the market. Now, what was the other setup? Oh, I found this one quite good too. I thought we'd talk about this. This, to me, on CBA on the daily, this is a tougher one. I actually don't mind this. And when we're talking about this level around 70 before, you can see anyone that wasn't here, basically the market's pressed down. You've got this level. It's quite a key level. I don't really need to draw that up. Around 70, we've had that little washout before, and then we've had the market pop higher. Not really off a higher low as such, but you can see that market pressed down. It's very, very rarely, pretty much retesting that 70 zone. Once we got through this high, then something was happening there. But that was on a weekly basis. But what we're seeing here, the market's getting more overstretched than what we saw back at this stage. For instance, the stochastics had a good little run up, come down quite hard. Stochastic didn't really move, so the selling pressure was more just got slammed down and turned around and bounced straight back up in the next week and took it out. And then the stochastics buying continued to get overbought when we matched up somewhere around 81, 82. Whereas now we're starting to get a bit overbought on this little press up. So looking at that, I'd have to say that the sellers are still pressuring this market. Whether or not they're going to push it back down to 70 or 71 and build a major higher low all over the period of weeks and starting to build it. But either way, I'm still inclined to keep away from a buying, say into the banks and CBA especially. Keep away from a buy just here because that pressure's still down on the weekly. We're popping up into that overbought territory. We're potentially holding a lower high, considering last time we were up there was way up at around 80, 81, 82. And if you drop down to the daily actually wasn't looking too bad. You got that, just if this is a washout, you got this washout of 70. I know it got right down to 67, but on the weekly chart, it's just a minor washout. On the daily, it's a few bucks. Then we've got this pop up. It hasn't quite broken any, for me on the daily, any serious anchor level. So that's why you just got to be careful with these sorts of things. It could be a bit of a sucker rally. And by sucker rally, I mean I could be completely wrong, which it happens from time to time. You get in the market, it's just washed out that zone. Say, was it 74, 10, 20, 74, 50 maybe, with this little spike up, reacted down, and we're starting to grind back up into it. Whether we just start and pull back down, we take out this low, and then we start to trend back down to 70, or then I'll be looking to see if we can build that higher low. The bulls can start to step back into the market and see if they can engineer a bit of a move up, and then you're going to look for that one move up, that pullback, and get that secondary move up, which is probably going to go off the screen. Which could take us up into more of a 81 area. But I hope that's making sense. I was just looking at this today, and I know there's probably going to be breakout traders with a buy through that high at 74.70. That's great if it works out. But for me, I'm looking at that, looking at the weekly, looking at the daily, and seeing that as more of a low probability trade. And some of these bigger shares do it time and time again. So the blue chips, you can see you would have got breakout traders through here, through the high of 81.56 on this high, and turned around and stops them straight back, potentially stops them straight back out, or put them under some serious pressure with a move right down to 70. So yeah, you just got to remember there can be setups in the market. Setups where this is looking okay on the daily, it's looking like a buy, and you've seen that it's been moving down for quite a while. What it could do is just pretty much whip you in. And if you're going to buy it on a breakout there, you're potentially going to have your stop just below 72. What's that low? 71.68. This green candle here, below here, it could whip you in, turn around and retrace back on you, have a deep correction. It is going to be up towards that overbought territory, and with the weekly as well, that's going to be an overbought territory. So is it really a high probability setup? So the market can do it time and time again. They can start to look good, but just take into account what's happening in the stochastics, what's happening on your weekly. Is it worth throwing money at the market when, to me, this is not, especially on SEH that we just mentioned before, to me, that's not worth it just yet. This is another one that could be a bit of a sucker rally. It pops through the high, sucks people in, comes back down, squeezes them back out, has another test down to 70, and then starts to end. Great if you can hold it, but who's to say that's not going to go through, these lows at 68 and just continue lower? And that would make sense too if you look at this on the weekly. If that's your first move down, we had a big pop up, and your secondary move down, that's going to be an extra what's that high, 87, 88 up to nearly $8 $8 below that low. So it's somewhere around 62, 60. You know, you don't really want to be holding it too much if it's heading down towards $60. So there could be, this move down could be your first leg down, big pop up, clean out some of these lower highs, and you get that secondary move down to 60. I'm not saying that's going to happen, but I'm saying you've got to be prepared if that could be the case. And I would rather be, if I was going to buy this breakout in the daily, I would be having my stop for sure below here. And I don't care if I get stopped out and this thing turns around, washes me out here and goes back up. That's just trading. But if it stops me into that trade up here and then it turns around and stops me out, I want to be prepared. I want to be planning ahead for every different scenario. The scenario this could be going down to $60, or it could be building a higher low. Now, if it builds a higher low, I'll get another chance at it, and I can make that money back that I just lost plus a bit more. And all that's just trading for me. So anyway, let's get on to what John was mentioning before I get too sidetracked. I hope that makes sense, guys. There is quite a few setups you can see that I wouldn't allocate a high probability setup, but there are some that are looking quite nicely on the daily. I think it's just at the moment just being a bit more careful than anything else. Now what do we have? John, you had MPL. Medibank I'm not minding as such. And we have looked at this and you can see just by looking at this weekly, that trend is up, had it accelerate up to say $3.30, had a big correction. But this is all in context of what's happened in the past, a deep correction, but it's probably maybe 60% of that move up, that corrective action. Then it started to get ahead of itself, maybe up here, had a bit of a pullback. Buyers kept stepping in at higher levels. All right. So if we just draw that up, you probably see that it's still holding that longer term trend up from 2016. Just draw that there. Yeah, pretty easy. And if you take it from here too, it's probably breaking down, but this to me is that longer term trend up. So this is more that sort of reversion to the mean. We washed out the highs here, and you can see that price action has led to some quite severe sell-off here. But what we're getting just of late, you've had this 1-2 moves down, pop up to build that lower high. So this is your key on the weekly. If that breaks through 310, I think this is enough to lead us for a push up through 335 and beyond and take out this high because it's working off a nice high low. This move down's cleaned out a lot of people, a lot of traders. You've got your higher low, say way back down at 270. So it really is a nice little position to start to build where longer term buyers are stepping up in here, potentially buying around 280 to 290 or $3, buying it in here, maybe from the daily charts. And you could probably see that we're getting close. That's probably better seen on a daily chart. That we're still in contraction lower, but I'm just looking at this as potentially being a higher low comparable to that 280 zone. And that a higher low generally is going to lead you to a push up to the most recent lower high, which is at 310, which means you're breaking out of contraction on the weekly. Then it's really just dropping down to a daily chart and just trying to find an entry from there. And you'll be gunning for the highs at 335 or thereabouts. So if you can get an entry somewhere around 3 to 305, great. You've got a bit of room to move, and you're probably not going to have too much risk on it. But I think what I'm saying is that weekly trend is up, and it's some major contractions. It's probably going to be a slow boat, a slow mover. Just drop it down to that daily chart. It's probably a bit clearer. You've got this one move down, a pop up, lower high, up at $3.30, a deeper correction, and all in context of being in an uptrend on the weekly. Then it had a good little reaction. So that's a good solid reaction up. Pull back, just washed out the highs, and then it led to some deeper selling. But what it's been doing in here is starting to hold. And you could probably argue that it could be worth a bit of a buy, remembering that weekly, with a push up through here. I probably wouldn't, only because you've got all this sort of price action here. I would just trying to word this properly. I mean, I would rather it back off from here. I wouldn't want to see it just break up through here now. You get stopped in and it has like this, it just breaks up. Okay, it has come out of, potentially it's come out of contraction. There's nothing to say it can't come all the way back down to 280. Like most people know, I would always look for contraction to break up out of contraction, like up here, then look for an entry I wouldn't be buying it anticipating that this is coming out, because it could easily just push up, and then you get this price action leads quite negative, and it just, for whatever reason, global problems, whatever, and at least it'll push down to 280 or below. I'd rather see it pop up and then build a higher low, because I think that's going to drag in buyers. So I think really this one should be on the cards for sure, John. It's just really the price action, what you'd be looking for. I mean, if you're not already in, if you're in, yeah, that's what I'll be looking for. If you just take that, I'll be looking for potentially this type of price action after we break up and out of contraction, which I think it's borderline about to do. All right, what was the next one? CCL. I was looking at that one. I'm hoping it's not a bit too late on this. You'd have to flick it back to the weekly. And let me just get my bearings. On the weekly, it's not looking too crash hot. And you can see it's really this latest price action. It's looks like it could be on the daily. I mean, this is one probably just what I was trying to mention before. That on the daily chart, okay, that's on an uptrend. Great, it's looking good. It's just broken through the high. Well, potentially we're getting through high 950. We've touched on 950, so we touched it today. Hasn't broken that high just yet. But if you're going to break through that high and you're going to stop yourself into a trade there at 955, for instance, buy it at 955 on stop, you may have your risk below 880. Is that too much risk? Okay, on a daily uptrend, that could be okay. It pushes up, pulls back. You might take a bit of heat for a while, builds a high low, and continues on. Now, the reason why I'd flick back to the weekly is just to look at it and go, okay, what's context is this move up into? And what's the context of this move up? It's been going for a while. It's been going for essentially start of end of last year, November. We've got this capitulation through here, and then bang, broke that anchor. So let's just draw that up. I think it's interesting. So if you're going to go long, I think this is the kind of price action you're looking for. At this stage, well, let me take one step back. At this stage, you've got your highs in place here. It's starting to come down. You're watching it here. It's broke through the anchor. Sorry, it's broke through the low. You go, okay, this was looking pretty weak, but that was an acceleration to low. The next day, bang, straight back up. And it started recovering for the next few days. So you know where your anchor is to this downtrend is right here. The market presses up through that just there, and then you go, okay, now I'll be looking for a buy. I'll be looking for a buying opportunity. The market sort of chops around, has a bit of a pullback here. Yeah, it would have been a tough one to buy in here, but that probably would have been a bit better if you bought it through this level, because it's more of a confirmed. It got a bit choppy in here, but in context of that low there, we started to build a higher low, another higher low, and we pressed up through this level. Would have been a nice buy in hindsight from there, but then you've taken advantage of all this move up. Maybe you've taken some profit somewhere along the way. I mean, who knows? But I think that would have been the entry. So now, and that's off the weekly, we're getting that sort of bounce on the weekly. We're getting at the start of that sort of daily move up. But for now, the way I'm looking at it here is by stepping back to the weekly. The weekly's not looking too strong, and we're potentially getting to the tail end of that daily move up, if this is making sense. So on the weekly, you just got to mark up your levels. You've got to level up here, say around 11, give or take. And you can see that it's pressed up here, pulled back, got a bit choppy here, had that second move up here, then it, okay, just failed. So you got a double top. Sellers just jumped straight back in, and we pressed it all the way back down, took out these lows. Okay, it didn't take it out by much before we started bouncing, and we're in the midst of a bounce here. And you can see we're sort of hovering around that overbought territory on the weekly. Nothing to say this can't just keep the grind up and keep grinding up to 1070. But this move up doesn't look quite as strong as this move up previously, when we moved from $8 up to 11, and then basically capitulated from there. So it could just get a bit choppy, or it could be preparing, like it could be straight here, washes out 950, and then we start getting the price doing this, washing out 950, and then starting to come down, build a lower high, and then boom, on we go. And it potentially could be another short, if that's making sense. And that's all because I'm not convinced at all. If I want to buy this from the weekly chart, it has to break up through 11, has to push up through 11, then maybe work its way back, and then build a setup for me, something to get into from the weekly chart. And I'll be obviously looking down to the daily for the setup, but that's the price action I want to see on the weekly to be a bull. at the moment, I'm not seeing that at all. I'm more bearish on this from the weekly chart. It's just the daily is bullish. So the fact that they're sort of button heads, I guess, the two of the charts or the two of the time frames, I'd be more inclined just to step aside. Because if you're buying it on the breakthrough 950 just here, you go, oh, okay, that's not looking too great. That move up is not looking too great on the I don't know what's happened fundamentally with Coke at the moment. I know it's always going to do something. People love Coke. But we're getting a bit long here on the weekly. If I bought it through 950, my stop has to be way back here. Maybe that's too much risk for me to take. Maybe I want to buy off the daily. But yeah, I'm not inclined to be buying this because that weekly is saying a different thing to me than the daily charts. And I don't think off a double top like this could be a major lower high. And then we take it out. Just imagine, actually, let's take a step back to the monthly. So what we've got this big long-term trend up over years since 2000, okay? Popped up here, big sell-off, pushed up, tried to go, had a pullback, it couldn't get much further than that. So there's still some weakness at that stage. Popped up, and this is the double top we just talked about at 11. So if this is a double top, for instance, and this is going to be a lower high, and then we continue, that's going to take us through, I would expect, lead to a sell-off through 750. So there's no reason from that monthly chart why it couldn't have a deeper sell-off. All right, and look at the monthly too. We're getting a bit overcooked up here, and we're only getting so far as $9.50. So on the monthly saying down, potentially that weekly is struggling. It's just the daily that could be a bit of a buy. So yeah, I would be, like I said, I'm inclined just to leave this one alone, step aside. I'd rather drink Coke than trade it. Yeah, so that's the way I would stand on that one. That's my outlook. Let's go to ASN and JAT. ASN, tough one. Anson Resources, 1.8 mil. Looks like a smallie. It looks like they're playing the argy-bargy. I don't know if anyone knows around that 10-cent mark. So there's a lot of plays. They muck around with it around that 10-cent mark because you can see it goes, the bids you can see is 9.2, 9.1. Actually, yeah, you can see that. The bids are 9.2, 9.19. So they go in increments of 0.1. Clicks at 10 cents, it goes to increments of half. So it goes to 10 and a half, 11, 11 and a half, 12, and so on. So what they can do is buy it at, say, around this zone, around 9.2 or 3, it gets ticked up to 10 bid, 10 and a half offered, and they can get out at center point. So they can get out at 10.2. So in that way, percentage-wise, it's quite a handy little gain, and they do it time and time again, play around with it, and then the market can get smashed from here. Smash back down to 6 and take a long time to recover. Not saying that that's what happens all the time, but that is a game that's played quite a bit. And that's probably potentially where we're at on the daily. You can see that they probably played that yesterday, played it around that 10-cent mark. What was the high of that? It got to 11. Whether that's 11 on the ask or 11 on the bid, don't know. Excuse me. But it looks like they do that quite time and time again. So looking at this daily, it's getting a bit overcooked up around that 10-cent mark. So that's why I'm led to believe that it could be just playing around around 10. You know, people who bought it around 5, 6, it's starting to get out between 10 and 11, or 10, 10 and a half, which would mean that it's going to have a bit of a pullback. Who knows? That weekly, the last couple of weeks has been quite solid, straight off that, was it 4-cent mark? And it has broken a minor little anchor, you can see here at 8.5. So the weekly actually, this is probably opposite to what we just mentioned before on Coke. The weekly doesn't look too bad. That weekly's looking all right. Obviously, some news out that's led to a big spike up, but the problem with that, whatever news it was, people weren't willing to hold it for too much longer. Got to 30 and come straight back down. So it's sort of started that move potentially around that 3-cent mark, got up through 10, got to 15, had a pullback to say 7 cents and had another run on to 30 cents. All great. The thing is, it's just absolutely got poleaxed after that, all the way back down. So whether that news is strong enough, oh look, there's people who play it back. They just muck around. They'll buy it up, buy it back down. Could be algos. Algos could definitely trade it. Yeah. Um, depends how sort of thinly traded it is. So It's an interesting little game they play. So yeah, this market got poleaxed from that 30 cent mark all the way back down to 4. So that's not a positive sign at all. So it's, for me, if I was looking to buy this, even off the weekly, I want to see a bit of time play out. I want to see it put in a nice little base, prove to me that there's a reason to be buying this and a reason to be targeting back up towards 30 cents. The weekly hasn't done it just yet, and I think the daily, that's not enough time really. I think the daily's just had that little pop up recently. I think it's going to pull back. I think on the weekly is probably the one to be looking at. Let me just draw that up. Drop that. Let me just drop that. Let me just actually drill down. All right, let's do that. Let's do that. Let's do this. So I think from here we've got some key levels. Obviously, it can't break through. You wouldn't want to see it get back down through 4. It's worked its way up of here. It's broken that anchor level there. So from here, we've had that pop up, which is that move up to through 10. I think if we can get it to do this sort of thing over a period of a few weeks, just contract in on itself, I think that's where it would be a bit of a buy. And I think that even if it is 7 or 8 cents below 10, I think that's going to lead to a press up. And when you get this type of move, a strong move up through 10, it's just going to blast through it. But we'll see how that goes. I think it's got to spend quite a bit more time over the next few weeks, potentially building that higher low, just bringing in that confidence that this move down is probably a one-off and it's starting to build. Maybe there is good news, there is good fundamentals, and that should be seeing higher prices. So yeah, that's what I'd be looking at on this one. So I'd be forgetting about the daily just for now. I'd be focused on that weekly chart because it actually doesn't look, even this, there's obviously something that's drove this straight back up. Some good news. Yeah, we will just have a look. There's obviously some good news that's drove it up. It's just what sort of, I don't know without looking at it, what that news is, because it's obviously driven it straight back down again. Maybe they've come out and said something that's going to, we're hoping for this. Okay, people bought it up on the back of that. It didn't play out, bang, straight back down again, back to the start. And maybe something in the last couple of days is some news release again is driving it back up. So they're starting to get a bit more positivity. But again, I just want to see this build potentially like this. You can see back here, a bit of price action like that, or something where you get a bit of choppy price action, a bit of contraction, and then you're looking for the daily charts to build a nice little entry and see if you can get that acceleration back up towards 30. We'll see how it goes. Excuse me. I hope that makes sense anyway. Now, what do we got? JAT. Oh, that one's a bit the same, isn't it? And sometimes these small ones, they can do that. There's quite maybe just a liquidity and really get a bit of a run on. See if there's any news on this one here. No, it's probably before that, is it? Oh, there you go. Something's obviously happened here. Products export to China, so this is based on the back of milk, is it? Yeah, good old China story. Where am I looking for now? Charts. Right, so that's obviously in the back of news. Whether it's been played out, I don't know, but that run up's going to be, sooner or later that's going to be unsustainable. There's going to be profit taking, boom, straight back down again. So this is pretty much along the same lines. You can see it's well and truly oversold down here, and it's holding above that 1 or 2 cent mark at 6 cents. Again, it just needs to put in a bit of time and effort, a bit of work. The one thing going for on the daily, you can see this move up here. That's been quite, it's a bit better contained than this move up. That's on Euphoria. Bang, it just took off. That sell-off has been quite contained, has been quite steady. So you really need it for me. Well, I need it to see it start to pop up. I want to see a couple of good days. Maybe a good solid green candle will pop up. Maybe a bit of profit taking, bit of a pullback to build a higher low, and then another couple of good days. And I think that would start to drag in some more buys. You built your higher low on the weekly, you built your higher low on the daily as well. And we're starting to look, then you'd be gunning towards those highs around that 29, 30 cents mark as well. All right, Gino, let's quickly look at SID. Okay, you can see it's coming to that 760 mark. It's been there before, so it's around that 750 to 60. It's been there up before, and it's been sold off. You get that sell off here, grind up, touch through the previous high. You get a big sell off again, and we're going straight back up there again. Pretty much high lows, high highs, pressed up through, but that reaction off that the previous high. So it's just to see from here whether we can hold. I think the key level is 710 just off this daily. If it breaks down through 710, this move up is starting to change. The bias is starting to change from bulls to bears, and potentially we start to hold a lower high and move down. But I think until that anchor level is broken at 710, this trend is up, but it's come right into a resistance zone, and probably clear on the daily, on the weekly. Again, it's probably about, for me, it's probably about time. Just needs to put in a bit of effort. Let's look at that. So we've got highs through here. It's touched on a few times. It's every time it gets up to that zone, even off this mark, it pushed up, rejected it quite quickly, built a lower high in here, pushed down. Buyers started stepping in the belly, took it up, tried to go again, couldn't get much further before we had a deeper correction. And all this is in context of this move. Built a higher low. We're starting to squeeze up against that resistance zone again. Up to before you can see this candle on the weekly. It's quite clear. Rejected there quite strong. So from here, I'd sort of would just, you can see that there's high lows holding on the weekly. It's not too bad. Sooner or later that might break up and through that 760 zone and just keep going. But I think it's got to be off a nice low point towards this support zone. Maybe, you'd be looking for something like this or like this, a deeper correction to start to work, and then you can get that bit of a run on, and then maybe it has a pullback, builds a high low, and then bang, and it just projects it straight up and through. But I think it's going to take a bit of time before these sort of high lows catch up with it, where the bulls start winning out and they just blast it straight through that 760 mark, and it just continues on. But that weekly is actually looking quite bullish for me. It is, you can see here, it's extended up here. The bulls are running out of puff. The buyers are running out of puff up here, and they're coming into resistance zone. That's why if you bought it somewhere in here, you're probably inclined to just take some books and profit. Bang, get up in the resistance, and then let it settle down, see what happens, back down to the daily, and you can see that that's, again, it's that level around 710. If that breaks, if we sort of pop up here and we come off a lower high, something like this, and it starts breaking straight through that 710 mark, I'll just steer clear of it. To be a buyer, I wouldn't be a buyer just up here. I think it's come off that, say, 630, pressed up into a major resistance at 760. I think it's going to have a bit of a pullback, and you can get another chance where you can buy it from a decent low level off that major rising support zone, like we said, somewhere in here, maybe 675 to 7. See if we can press down into that zone, maybe around here, take out a few of these higher lows, take a bit of heat out of this move, and then start to build, spend a lot of time. That might be a month and a half, 2 months, that play out. Get that squeeze just like we've got probably in here, you can see it. That sort of squeeze in here where we've got higher lows, and then you've got a reason to buy it. It's a major higher low, a weekly higher low. On the daily, it started to get some higher lows built, and you got that squeeze, and then bang, you get that acceleration up, and then be gunning back up towards these highs and see what happens again. And if it doesn't play out again the second time, it gets up there and starts backing off, book your profit, call it a day, and see what happens. Or book a partial, leave the second part to open up a bit and see if it can press up and through. All right, last one. Nia. Did I get it? Yep. This one's probably, for me, looking a bit nicer. And the difference is, for me, it's had a nice long-term, not long-term base. Yeah, it is getting a bit ahead of itself up here, even on the weekly, but it spent a lot of the time, resetting itself. You can see it spent a lot of time backing off, straight up, backing off again, building a higher low. It spent a lot of time. That led to a good sort of push up through the highs at just below $1, say 95, this high here. Pulled back. It got through the highs, but it was extended. You can see that, was it about 10 green candles in a row on the weekly from overbought, so oversold to overbought, cooked up, had a bit of a pullback, didn't get much past 90 cents. reset itself at 90, and that's projected up and through the previous high at, say, around that $1.10. So whether we're just going to back off from here, we're overcooked on the weekly. Maybe the weekly saying hold off, wait till it has a bit of a pullback, see if we can get another weekly higher low build around 1 or 105 over the next few weeks, and then look for your daily entry to press up and through 120. Problem is that daily is actually not looking too bad. So the daily actually could be a bit of a setup, and you can quite easily draw a line. Oh, I don't like those charts. Get that. Draw a chart in. Screen snapshot. Something like that. You can see that is potentially, the daily is having a setup. There was a higher low here, potentially is in the zone to make a higher low off this major higher low on the weekly. So that you probably take that leg up. It could potentially just have a bit more of a run in it. We'll see how it goes. I think even on the daily, it's getting a bit ahead of itself. Not a bit ahead of itself. It's probably a bit late into the trade here. If you're going to buy it, maybe you're looking for a buy up through 117, 180, and your risk has got to be here at 110. Excuse me. That's purely because if it gets up through here, you don't want to risk too much, because you can remember the weekly may be getting a bit ahead of itself. It's a bit extended on the weekly chart. Up here, it's extended, so you've got to ask yourself on the weekly, which is this move up here so far, on the weekly there's no unknown. It's everyone knows what's going on the weekly. It's going up, all right. But are we at the tail end on the weekly of the move up, which would mean a lower high? It's going to press down and you're going to get cleaned up. On the daily, yeah, look, it could be worth chucking some money at it to risk. I wouldn't be risking too much. I mean, who's to say I'm right and it's going to roll over? It could just continue straight on. And you look at the stochastics, it's had a good little press down from those highs at 120. We've had sort of, you can even break that daily chart down to 1-2 moves down, and we're starting to lift again. But again, my risk would be just below that 110, and I wouldn't want to be risking too much to see if it does get on with it. And I'd be pretty quick to jump out if it struggles, or if it spikes up, had a good little spike, I book some gains, take it off the table, call it a day. So yeah, that's why I'll be taking that one. So the weekly to me is looking a bit stretched. That daily is probably looking like it could set up easily. But the same token, it could pop up, build a lower high below 120, and then have a deeper correction, and still hold up on this weekly major high low at 90 cents. All right, so I hope I'll probably have to call it a day there, guys. I'm getting a bit dry in the mouth, but I hope that makes sense what we're talking about. There's quite a bit of conflict in the charts. The weeklies are looking good. The weeklies are looking stretched. The daily could be, I mean, a lot of these daily charts could be suckering you in and squeezing you back out on a deeper correction lower. So you just got to be careful. I like to work the daily charts on a weekly pullback. Say, ideally something like this. You've got that weekly pullback here, weekly contraction, and you're on the dailies looking for your entry, potentially through here, risk down here, and then you're ahead. You're just managing risk after that. So yeah, that's what ideally I like to see. But it looks like a lot of the stuff I'm seeing, I mean, we got stopped out of a couple. There's a couple that are going okay, but they're just struggling a tad. They're not kicking on like you would expect. The charts are looking good, but they're just struggling. Again, everyone could be just in a wait and see mode on tariffs. I think there's a few things to work out before we potentially kick on the ASX, but we'll see. So anyway, take care, guys. Thank you for joining me. We'll call it a day there. Yeah, thanks for joining me. We'll see you again on Monday. Like I said, any questions you may have, anything you want to have a chat about, feel free to send an email to support@tradesetup.com.au, and we'll go from there. Cheers, guys. Have a great weekend. Bye.